Absolutely. And then the next big thing, of course, is when you sell your property, okay, you cannot take a single dollar out.
Or you're going to have boot.
Or you're going to have what's called boot. And that means that piece is taxable. And depending on how much it is, you could spoil your entire capital gain that you're trying to avoid paying on.
You've got to work through a qualified intermediary as well.
Yeah.
Okay. So this isn't just your tax advisor. Look, I'll be the first one to tell you, we can advise you on the taxes on this, but we're not qualified intermediaries.
No.
We will have to outsource that. And most tax advisors, they operate in the same fashion.
Yep.
So we got to make sure you have a qualified intermediary. Okay. Just to touch on a little bit more, the property must be like kind in nature, right? Meaning that if it's commercial property, it needs to be for commercial property. If it's residential, it needs to be for residential. And as Rick and I were discussing, if you receive any cash in conjunction with that sale, that's considered boot. That becomes a taxable event.
Yeah.
Okay.
And it can't just be, hey, I put it in my savings account, so I never really touched it. Yeah. That's considered possession at that point.
Yeah, absolutely. Documentation is key, Rick. You have to document. And that's part of having an intermediary. They're going to help you with that process. And they're going to ensure that you stay within the confined lines of that 45-day window for identification, as well as execution of that new property within 180 days. So documentation's key, because if it gets called into question, you better be able to substantiate your position.
Yeah, and I want to go back and make sure when you find this qualified intermediary, this isn't your Uncle Bob or even an attorney sometimes.